Hello everyone, how's it going? I hope that you have an amazing day and a very profitable time with Palantir and the rest of your stocks. If you're searching about Palantir today and have decided to click on my video, then chances are you're wondering about what just recently happened. And also, should you be taking on this opportunity to buy more Palantir shares? So, as we know, over the past few years, the job market has become ever more uncertain than ever for many people. And the inflation, on the other hand, has also been melting away everyone's savings in places that used to be deflationary for decades. In fact, if anything, a lot of people have been saying that in the current cycle, most of us just don't have the capital to invest anymore because it's been melted away by the rising cost of everyday's, living expenses, food, gas, shelter. So this is really a good opportunity, in my opinion, to at least, realize that we need to take things into our own hands in order to assure our own capacity to survive and to improve our own financial health. In order to secure a better financial future for all of us, we have to find the growth opportunities of tomorrow and to seize them today so that we can profit from them when the moment comes, increasing the money available for later investments. Essentially, we gotta find this golden goose, and for many, Palantir is one of those companies. Over the years, Palantir became so much more than just yet another tech stock that is collecting money in exchange of promises. It has become a major company that plays the role of the canary down the coal mine and has enough clout and mystery around it to arouse the market's curiosity and the people's tendency to follow the trend. It is a company that people would often view equally as the risk appetite of the market alongside Tesla, Apple, Microsoft, or Nvidia. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very useful prediction tool for us to use, and this is, if anything, also one of the good reasons to keep Palantir in our shortlist. And in this video, we're going to take a deep dive into Palantir, see if the stock is good for you, and if so, when should you buy it, how much should you buy it, and how long should you hold it for? Before the video continues, I just want to take a moment to thank every single one of you for coming to my channel, and I hope you're going to enjoy your stay while also getting something new for your investment strategies. So with that being said, let's get started. Palantir Technologies over the past few days has experienced some significant price movements. As of the latest update, the stock's price has seen a high of $23 and a low of $22. These fluctuations indicate a certain level of volatility within the market, especially towards the downward direction, as the expectation has been steadily building up over the past few weeks, as the price has had a hard time moving up while the volume traded consistently below the average. In the short term, analysts have identified a resistance level at the $25 region, which the stock has struggled to surpass. So it also has a support level of around 23 and then a bit lower than that, the $20 level, which all provide some stability to the price movements. These levels serve as important markers for investors because they indicate potential areas where the price reversals or continuation may happen. The short-term trend for Palantir stock appears to be moving sideways with a slight downward tendency. The trend can be attributed to a decrease in both interest and volume from investors. While the overall trend remains bullish, the weakening momentum suggests a momentum shift from the market sentiment. In terms of volume, the stock sees a trading volume ranging from 30 to around 45 million shares per day and peaked around 70 million shares, with a 30-day average around 50 to 60 million shares. This data would suggest a decrease in trading activity compared to the historical average, which indicates a potential loss for the market interest. Palantir is currently experiencing a period of weakening momentum, despite maintaining a bullish trend overall. The short-term price movement indicates a sideways pattern with a slight downward tendency, influenced by the decreasing interest and volume from investors. While the stock faces resistance at around the $25, and currently its support region ranges between 20 to 23. In other words, a pretty choppy situation for sure. These levels may further fluctuate as the market conditions evolve. So we should always be careful when monitoring these developments to make informed decisions regarding the next step. If anything, I would say that we don't really have to worry about the recent price action weaknesses because it's likely a combination of profit taking, lack of additional catalysts, and the downgrade that some analysts are now displaying given the current market circumstances. Palantir has been one of those stocks that really has captivated our interest and imagination since its IPO date, because ever since it began trading on the secondary market, the sentiment has been overwhelmingly bullish, with investors eager to capitalize on the company's innovative data analytics technologies. Now, obviously, Palantir's journey into the stock market has been shown and characterized by intermittent periods of bullishness and of bearish sell-offs, dipping at one point below the $10 mark. One significant aspect of Palantir's price movement is its correlation with both the fundamental and the macroeconomic news cycles. It's often observed that the news surrounding the company is closely reflected in its price action, leading to a self-fulfilling prophecy scenario. When the stock is on an upward trajectory, positive news tends to dominate the headlines, fueling further investor optimism. On the other hand, during the downturn periods, the negative news amplifies the selling pressure and the sentiment turns negative, which will accelerate the downward trend. Currently, Palantir is having a bullish run, albeit with diminishing momentum and occasional pullbacks. While the stock has shown resilience in recent sessions, the pace of its ascent has slowed down, indicating a potential shift in its sentiment amongst investors. As such, there's a growing need for additional catalysts to sustain the bullish momentum and to propel the stock to new heights. One factor that can influence Palantir's future performance is its status as a large cap stock, with its market capitalization steadily increasing. Palantir is poised to solidify its position amongst the market leaders. Large cap status often brings increased institutional interest and a broader investor base, both of which would contribute to the further upside. Despite current bullish outlook, and by that I mean the overall bullish outlook, it's essential to be cautious because, of course, the price target in the range of $30 to $35 might be possible, even plausible, but it's not going to be like a very easy road to reach that place. It is by obviously no means guaranteed, and the market dynamics may change rapidly. So, when it comes to the options, the available strike prices to puts range from $23 to $25, and the calls range from $26 to $27. The distribution would suggest a skew towards the call options overall, although there are still significant put options volumes, indicating a consensus amongst the traders that Palantir's price is probably going to move upward, if anything. So options are very useful tools for stock traders because they provide additional revenue streams, hedging against price volatilities, and increase the speculative exposure to a controlled extent for people who want to have exposure in the stock without buying the underlying equity. In the case of Palantir, options can be utilized to navigate the market uncertainties and to optimize the returns. Now, what I would recommend is to employ something called a straddle strategy with out-of-the-money options. By doing so, investors may position themselves to profit regardless of the direction in which Palantir stock will ultimately move to. The flexibility is especially valuable in markets characterized by uncertainty and fluctuating sentiment. It's very important to note that the options analysis suggests a nuanced approach that balances the speculative exposure with risk mitigation strategies. By purchasing both call and put options at the same time, it aligns with a strategy that bets on the volatilities instead of a direction. Investors can navigate Palantir's price volatilities while positioning themselves to capitalize on either up or the downside movements. It's crucial, however, for investors to conduct thorough research. Basically, what the options analysis suggests is a nuanced approach that balances the speculative exposure with risk mitigation strategies. By purchasing both calls and put options with strike prices aligned with the current market dynamics, investors can navigate the Palantir's price volatilities while positioning themselves to capitalize on the potential upside movements. However, it's crucial for investors to conduct thorough research and to, be careful when playing with options, because not everything is according to plans and not everything will necessarily make sense, especially when it comes to how much the value for any sort of options contract might be. Investing in a company like Palantir obviously presents its own opportunities and challenges for investors seeking exposure to the burgeoning tech industry, especially in the realm of data analytics. So, we have to understand the upsides and downsides of owning Palantir shares and therefore making informed investment decisions. One of the primary reasons investors are drawn to Palantir is its substantial growth potentials. Positioned as one of the leading players in the data analytics sector, Palantir operates in a field with a lot of promises for its own place in the economy of tomorrow. As businesses increasingly rely on data-driven insights to improve their operations, companies like Palantir are well positioned to capitalize on this trend. With its expertise in handling and analyzing large volumes of data, Palantir stands to benefit from the growing demand for data-centric solutions across various industries. Also, Palantir's current financial stability is a reassuring factor for the investors. Unlike many tech startups that operate at a loss, Palantir has already established a revenue-generating business model. This reduces the likelihood of share dilution through frequent fundraising rounds, providing investors with a sense of stability and the confidence that we definitely need. The other thing is that Palantir has demonstrated its ability to capitalize on popular trends to generate significant interest from the market, especially amongst retail traders. Through strategic moves and partnerships, Palantir has effectively enhanced its visibility and appeal, attracting attention from both individual and institutional investors alike. This ability to capture market sentiment and leverage it is to its advantage because it further underscores Palantir's potential growth and success in the long run. However, investing in Palantir stock is not without its risks and challenges. One potential concern for investors is the possibility for legal contingencies related to the privacy and ownership of data that it treats. As a company that deals with sensitive information, Palantir may face regulatory scrutiny and legal challenges in the future, which could adversely affect its market value, reputation, and brand power. Any negative developments in those areas may significantly impact the investor's sentiment and the company's financial performance in the future. The other thing is that Palantir is very dependent on the public sector and the contracts that they're getting from. While government contracts may be lucrative, they also entail a degree of uncertainty as they are subject to political and budgetary constraints. If government agencies decide to cut back on spendings, or to shift their priorities, or that they have to change their service providers because of bad PR, it could have a detrimental effect on Palantir's revenue and the growth prospects. This concentration of revenue from a single sector could be one additional risk and volatility factor. Another potential downside is the possibility of the shift in the market narratives away from data, away from the currently very popular AI. While these technologies are certainly high in demand and are certainly interesting, the changes in government policies or regulation can impact the perceived relevance and value of what Palantir offers. If the market begins to favor other sectors of technology, it could take away the liquidity that is currently parked into Palantir and the AI stocks to the new horizons. So, investing in Palantir is obviously, something with a lot of upside potentials. It also comes with inherent risks and challenges. So, when investing, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Now, considering all the factors that we've just mentioned and Palantir's current performance, buying Palantir shares could be a prudent long term investment strategy for those seeking exposure in the tech sector. Palantir has demonstrated its resilience even in bearish market circumstances, indicating its stability and the potential as a significant player in the industry. Palantir has shown its ability to adapt and capitalize on new market narratives, which is crucial for rapidly evolving landscapes. Its capacity to seize the opportunities that come suggests that it may continue to thrive and to generate value for investors over the long run. Another factor to consider is Palantir's self-sufficiency, which may reduce the likelihood of significant dilution for existing shareholders. This financial stability provides a level of reassurance for investors, indicating that the company is well positioned to weather market fluctuations and to promote its own growth strategies. It's essential for investors to approach buying Palantir shares with caution and patience, though. Given the potentials for the market volatilities and the uncertainties ahead, it may be wise to gradually build up a position in Palantir. And by adopting a slow and steady approach, investors may mitigate the risks and to take advantage of the potential opportunities while positioning themselves for the long-term growth and success. Regarding a specific entry point, I think that the current timing might be a good place to start, since the share price is having a relatively low point compared to the past few weeks and even past few months. So, of course, while there are still some inherent risks associated with investing in any stock, especially Palantir, it presents a pretty compelling opportunity for investors looking to capitalize on the resilience of our tech sector. With its demonstrated ability to navigate challenging market conditions and seize new opportunities, Palantir has the potential to deliver value for investors over the long run.